Hello there. Welcome to Accounting Grade 10. We're still working on a question paper from the Popo province, and it's a provincial common test, grade 10. And if we move down, you'll see that this is for term 1, accounting term 1, task 2, control test number 1. That is for March 2023. So this is what we have. So on that question paper, we are going to look today. We're going to look at question 3 of that uh, common test. So we go to our question. If you come here, that's where we have got our question 3, and it's on concepts, control accounts, using the perpetual inverter system and internal control. So it has 50 marks, where you are expected to spend about 40 minutes on that question. That is question 3. So on 3.1, we are going to start on concepts. And the question reads, answer the question by filling in the missing words indicated below. We are given answers there in brackets that we are going to choose from, whereby we have got the petty cash journal, the cash receipts journal, also have the cash payments journal, the debtors journal, creditors journal, debtors allowance journal, and then lastly we have got the creditors allowance journal. So these are the options that we have that we are supposed to fit in there. So for 3.1, we have 3.1.1, which reads dash is used when customers retain goods or claim allowances. So we know that when we sell goods to the customers might retain these goods back due to many reasons. Maybe they are damaged, maybe they are substandard, many reasons that they might see upon the goods that they are not up to scratch. So they may retain them. So when they retain them, which documents do we is used there? So we are supposed to choose from the figure that we are given there. These are the books of original entry or the journals that are given there as our options. So which one do we use for 3.1.1 when our customers retain goods? So you see that we've got the debtors allowance journal here, the debtors allowance journal here. This is the one that is used. We can also call it a returns journal. It records the goods that have been retained by customers. So here on 3.1.1, we've got debtors allowance journal. So maybe we can write just in front of it there to indicate that this is debtors allowance journal. So 3.1.1, we've got debtors allowance, debtors allowance journal. Debtors allowance journal. So that's what we have in terms of the first part of that question. Then we go to the second. We've got 3.1.2. It reads, cash is used when cash is received. We know that when cash is received, we enter it in the cash receipts journal. So cash receipts journal here is the most appropriate for 3.1.2. Cash receipts journal, that's where we record cash which is received. So we can just indicate there that this is the cash receipts journal. So here we have got cash receipts, cash receipts journal. That's 3.1.2. Then the next one, dash is used to record small amounts of money. We know that small amounts of money are petty amounts, and obviously we are going to record that one in the petty cash journal here. Petty cash journal. So we have the petty cash journal. Then the next question is saying dash records credit purchases of goods. When the goods are purchased on credit, remember we have got the creditors journal. The creditors journal is the one which we record our credit purchases. So here we have the creditors journal. Dash is used to keep records of cash paid out. Dash is used to keep records of cash paid out. So when you are paying cash, it means you are making payments. So obviously now we record them in the cash payments journal. So cash payment journal becomes the last report there, cash payments, cash payment journal. So this is last school that we got 3.1.5. Then we can as well move on to the next question. It's on control. First question is on control accounts and internal control. So that's what we have there. So the question reads: the information below was obtained from the books of EMA traders. So the required part 3.2.1 reads: open and balance of the accounts in the general ledger. Then we are given the first part is what requires us to prepare the trading stock account, and then we have got the debtors account. So these are the questions that we have on 3.2.1. So we are going to go through the information and enter them in the trading stock account and the debtors control. Remember, we have got the answer section there where we have got them already prepared the T accounts. So we are just going to go and enter the necessary entries. So from there, you see that the information that you are given, part one is saying following balance appeared in the books of EMA traders. So we've got the trading stock balance that is on 1 March 2022, which is 30,300 rands. So this is our opening balance for trading stock. And then we also have our opening balance for debtors control, which is 15,800 rands. So what we are going to do, we are going to go to the trading stock account and enter this one, 30,300 as our balance BT. And then we also enter the opening balance for debtors control as 15,800 rands. And remember, we can take note of the debt there. That is on 1 March. 1 March, we are going to also have a column for debts. So we're going to enter this as debt. So we can go to the under section and enter those figures. So we are here. For trading stock, remember, our opening balance is 30,300, and obviously, opening balance on the trading stock comes on the debit side. So we have got on details, we are going to say balance, and then we also have on our folio, that's where we are going to put our BT. And remember, we've got the date there that we took note of, that is 2022. The date was 2022, 2022, and it was on March 1, 2022. March is March, and then 1, and then the amount there was 30,300. So we've got 30,300 here. Right, so that's what we have as our opening balance for trading stock. And also we have got the next account that we have, which is the debtors control account. And we are also given the opening balance there. We saw that it was 15,800. So debtors control again, it's an asset again. So it has got a normal balance BT on the debit side. So we are going to have our balance here on the debit again. Balance in our folio here is now our BT at 2022 March 1, 2022 March 1, 2022. This is March 1. So this is what we have in terms of our opening balances. And then the amount, remember here, the amount is 15,800. So we are going to put our 15,800. So this is what we have in terms of our opening balances. Then we go back to check the next information that we have there. We go back to see that we now go to the next page, and then we are given the information for cash receipts journal. We are given the information for cash receipts journal, and on the cash receipt journal, we have got a column for bank, sales, cost of sales, debtors control, discount allowed, and then for sundry amount there. So we want to look at the entries that are affecting the debtors control in the trading stock account. So you see that there we have got our, let's try to see which one do affects the debtors control in the trading stock account. So on this case, this journal, we are just going to look at the entries that are affecting the trading stock account and the debtors control account. So you see that we have got here cost of sales 25,800, which is affecting the trading stock account, and then it was also the debtors control 8,340. So on this one, cost of sales 25,800. Remember, when you sell goods, we are going to charge cost of sales in the trading account. So we need to see the amount of the goods that we've sold at their cost price. So the cost price of the goods sold, that is the cost price representing the amount that we purchased those goods, will represent the cost of sales amount. So when we sell goods, so we can just maybe summarize the double entry that is there. When we sell goods, when we are recording cost of sales, when we sell goods, we can just say cost of sales, double entry, cost of sales when selling, trading stock. So this is the double entry that we have when we are selling trading stock. The double entry is that we debit cost of sales. We debit cost of sales there, GR meaning debit, and then we credit the trading stock. So we credit the trading stock. So this is what we have when we are recording cost of sales when selling trading stock. So we'll be the figure that we'll be using to debit and credit here is at cost price. We use at what? At cost price. We don't use the figure for selling price. Remember, we got selling price amount, and then we've got the cost price amount. Remember, to find the selling price, we say cost price plus markup, then we get your selling price. So this is what we have. So for this one, for cost of sales, we'll be concentrating only on the cost price. Then when you are recording in the debtors control now, you'll be using the selling price. So this is what we have in terms of this double entry. And here we are concerned about, we don't have a cost of sales account, but we have a trading stock account. So we are going to credit the trading stock account with the figure that we have there. So we come here on the cash receipts journal. On the cash receipts journal, we have got cost of sales here 25,800, and we are saying trading stock we credit. So we are going to credit the side of the trading stock account and enter this one 25,800. So we go to the credit side of the trading stock account and enter that one. And remember, all these figures are being taken at the end of the month. So the date that we are going to use for this is 31. We are in March. 31 March is the date that we are going to use for these entries. So we go to our answer section and enter that one. Here, trading stock, we go to the credit side there, and then we enter. We have got our dates. Our dates are 2022. And then this is March 31. March 31, and then all the details, we know that these are cost of sales. We know that these are cost of sales. And we know that on the folio, the book of original entry that we are checking this figure is cash receipts journal. So you see CRJ there on folio. Then the amount we noticed that it was 25,800. So we have 25,800 here. So this is what we have in terms of recording of this cost of sales. So we come back here, we go to our person again to see what we have next there in the information that we are given. So from cash receipts journal, in the cash receipts journal also we have got the figure for debtors control 8,340. So for debtors control, remember we are also going to enter that one, which is 8,340. So what happens here now, we can also summarize in terms of the double entry that is there. This is the amount that has been paid by the debtors, and we are receiving the money. So we are saying payments by debtors, money received by from debtors. This is money which has been received from debtors. Remember, debtors are customers who are owing us money. So the double entry that is there is that we have the debtors control. We have got the debtors control. The debtors control, remember, when we sell goods on credit, we debit the debtors control. So when they are now paying, when we are receiving, they are paying, we go to the opposite side of the debtors control, and that means we are crediting so as to remove that amount and to reduce the debt of that customer. So we have the debtors control, and we also have bank, depending on the method of payment of that debtor. It might be bank, it might be cash. It's the one that is being debited. So here is the one that is being debited, and then debtors control we credit. And if you look at it, the only account that you are concerned with is the debtors control. So we are going to credit the debtors control with the figure that we are given there. So if you come here, you see that we've got 8,340 that we have here. So we are going to credit side of the debtors control and enter that amount. It is coming from the cash receipts journal again as our for your reference. We go there and enter that one. We are now on the debtors control. So we are going to the credit side. We are going to the credit side, and we are saying this is 2022. 2022, and it's March 31. March 31, and then all the details we are putting bank. Let's put bank here. And then on folio, we are taking this information from the cash receipts journal, and the amount was 8,340. So this is what we have in terms of the this entry. Then we go back again to check what we have. We go back there to check what we have next. Right, here next now from the cash receipts journal, we are going to the cash payments journal. Cash payments journal. Remember, we are looking at information that is affecting the debtors control and the trading inventory. So here you see that we have got a section, a column there that we are using for trading inventory. There of we have 15,690, 15,690, and when recording this one, when we are recording this one, remember we are buying stock here. It means we are receiving trading inventory, and we are going to debit trading inventory. So the double entry that we are using here is that we are debiting trading inventory this amount, and then we credit the cash or bank, depending on whether we paid through check or we are paid using cash. So so we are going to go to the debit side of trading inventory and enter this one again, 15,690, and it's coming from the cash payment journal as our folio. So we go there and enter that amount. We are on trading stock. Then we are saying this is now on March 31, and all the details is now bank. And we are saying we are taking this information from the cash payment journal, and then The amount is 15,690. So that's what we have regarding that amount. Then we go back again to check what we have next. So you see that this is the only one that we have that is affecting the trading stock account. Here we don't have anything that is affecting the debtors control, so we leave it. We go to the next one. We have the creditors journal. We have got the creditors journal, whereby now we have the trading inventory again is there. The trading inventory is again there, which is 9,250. So what happens is on the figure for trading inventory that we are seeing in the creditors journal is representing inventory that has been bought on credit. So whenever inventory is bought on credit, we enter it in the creditors journal. When we use cash, we enter it in the cash payments journal. We use cash from bank, it's entered in the cash payments journal. So that's what we have. So this is the portion of the amount that we have bought inventory using credit. So we have 9,250. So this we are going to debit trading inventory, and we credit the creditors control. Debit trading inventory and credit the creditors control. That is double entry for this figure, 9,250. So we are going to go to the debit side of the trading inventory and enter this 9,250, and obviously all the details we are going to put creditors control. And then on the folios column is the creditors journal, so it's CJ that we are going to put there. So we go to the answer section. We go to our answer section. We are on trading stock, and then we are still using this date of 31. All the journals, their amounts, the date that we use is 31 because it's at the end of the period. So here for the details part, we are putting creditors control. Creditors control. This is our creditors control. Then on the column of folio, we have got the creditors journal. So we are just going to say CJ. And then on the amount, we've got 9,250. 9,250. Right, so that's what we have on that one. And then we can move on to check what we have on the next details that we are given there. We are now here. We are now on creditors journal. So we go down to debtors allowance. Debtors allowance. Right, on debtors allowance, we have got 432 is our debtors allowances, and then we've got cost of sales is 244. So we can start with the debtors allowance figure, that is 432. So remember, this figure is an allowance, and they are representing returns that has taken place. The debtors is retained some goods. So when they retain, we are doing the opposite in the debtors control, because we have got our debtors control. Remember, we have got this is our debtors control account. When we sell goods on credit, we enter on the debit side. We enter on the debit side. But when the goods are retained, it means we want to reduce this amount. So we are going to enter on the credit side the amount that has been retained, so that it reduces this amount. So this is what we have. So it means the debtors control is going to be creditors. We credit debtors control. Debtors control is going to be credited when they are debtors allowances. These are debtors allowances. So it means our debtors control, we credit it. And then these goods are coming back in the business. So it means they're coming back to the trading stock again. So the trading stock now, the trading stock, we debit them because the trading stock is receiving those goods. We debit. So this is the double entry that we have. So it means this amount of allowance is going to affect the debtors control. It's also going to affect the trading stock account. So that's what we have. And we check the amount that we have there. We check the amount for debtors allowance. We've got 432. So it means here we are going to have 432, and also here we have 432. So that's what we are going to do. So we go to all the accounts, we debit debtors control, we credit our so we credit our debtors control, and then we debit our trading stock. So that's what we have with 432. So we come here, this is a trading stock, and on our trading stock, we are debiting it. We are debiting our trading stock there. We are debiting our trading stock there. Right. When debiting the trading stock, we don't debit using the selling price, because remember, this is the selling price. Remember, we said selling price is equal to cost price plus markup. So when we are the amount that is going to affect the trading stock is only the cost price, and the cost price is 244. So it means what is going to be debited on to the trading stock is not 432, but it's going to be 244. So that's that correction that we have there. So it's 244 here. So on the trading stock, we are going to debit it as 244. So we go back there and put that one. But in the debtors control, we are going to put the 432 at selling price. So this is what we have there. We can go there, trading stock. So what we are saying, the on details is cost of sales. Cost of sales, and remember, we are taking it from the debtors allowance journal, so DAJ. And then the amount, this is trading stock, we put it at cost price, which is 244. So this is what we have. Then we go now to the debtors control. Debtors control, we are now using the selling price. At debtors control, we are now using the selling price, which is 432, and we are going to the credit side, remember. And on details, we are saying, this is our debtors allowance. Debtors allowance. So we can just say debtors, and our A is representing our allowance, debtors allowance, and this is coming from the debtors allowance journal. And then the amount that we have there is 432 at selling price. So this is what we have in terms of our debtors allowance, which is 432. So this is the figure that we have. So we go to the next one to check what are we going to do. We come here. After this one, we go to the next one, which is the debtors journal. Right, on the debtors journal, we are given again debtors totals, and then we've got the sales of 13,980. 13,980, and then we've got our cost of sales of 9,320. So we have the column for cost of sales there. So it means this one for cost of sales, we are going to credit it in the trading stock account, and then we debit the cost of sales. Remember, we summarize that double entry. Credit cost of we credit the trading stock, and then we debit the cost of sales account with this 9,320. But we are concerned only with the trading stock account, so it means we are going to the credit side of the trading stock account and enter this 9,320. Then this one for sales is going to affect the debtors control. Is we are going to go to the debit side and enter it as 13,980 there. So for the debtors control, maybe you can start with this one for cost of sales. Let's go to the trading stock account and enter 9,320. Trading stock account. Right. We are now on the trading stock account, and we are entering the 9,320. 9,320. So we can for our dates, we have March 31 still applying there, And then we have our cost of sales. Costs of sales. And we are taking this figure from the debtors journal. And the figure is 9,320. So this is what we have in terms of our cost of sales. Then we go back there, we've got another figure that is there for our sales, and it's going to affect our debtors journal. So on our debtors journal now, we're going to enter this figure, but if you go in the end of this question, let's try to go down. Let's try to go down. We can go to the next page. We have got this amount. Let's an invoice on item 3, additional information. An invoice of 3,431 for goods sold on credit was not recorded, or only entries regarding the costs were entered. So what does it mean? It means this amount is for our sales, but they were not entered, so we need to enter them. So this 3,431, we are going to add it to the figure that we have there. To the figure that we have there for our sales, which is 13,908. So say 13,980, and then we add 3,431 that we have on the additional information. So we go back there to our debtors control. Go to our debtors control. I see that our data control is here, and then we've got our dates there. It becomes date 1. And then on the details, we are saying they are sales. So I will just summarize the working that we have there, which is 18,980. Then we added our 3,431. So we add that one. The total that we are supposed to get is 17,411. 17,411. And this one we are checking the figures from the debtors journal. So this is what we have. There we go and check again the next information that we have. Right. From there we have got, this is our debtors journal. Now we are on the creditors allowance journal. We are now on the creditors allowance journal, and we've got a column for trading inventory, whereby we have 543 that we have there. So this creditors allowance journal represents the goods that we bought from suppliers, and then we retain them. When we are retaining them, we create this one, creditors allowance journal. So it means they are going out. They are going out, so we are going to credit them. They are going out, so we are going to credit them in the trading stock account. Remember, when we buy them, they come to the debit side of the trading stock account. So when you are retaining them, they should go to the credit side of the trading stock account or the trading inventory account. And then the opposite entry obviously will go to the debit side of the creditors control. So we go there and enter that one in the trading stock, trading inventory account or trading stock account. This is what we have. So we are going to the credit side there, and we are going to put our this is going to the creditors control. Creditors control, and the information is the creditors allowance journal, and the amount that we have there is 543. So this is what we have in terms of this one. Then we can go again to check what we have next. What we have next there. So you see that we are now on the sales part, and we have nothing that is going to affect our debtors control account and our trading stock account. So we can go next page to see what we have. Right, this one we've already adjusted it, but we've got this first point, which is saying the owner took goods with a cost price of 900 rands for his own use. A markup of 50% on cost is applicable. What we are concerned with the goods that have been taken at cost price 900, it means they are being taken away from the trading inventory or trading stock. So the trading stock is going to be reduced, and when they are reducing, we go to the credit side and enter it. Remember, the goods that have been bought are on the debit side of the trading stock. So when we are taking them out, we are going to the credit. And these are drawings. They are being taken for own use. This is personal use. So whenever the owner takes goods for personal use or own use, we regard them as drawings. So we come here, we are going to enter them on the credit side of the trading stock account. Here we have got drawings. So on our drawings, we have our, we are taking them from the general journal. General journal is the one that we are taking these goods, and we enter them at cost, which is 900. So this is what we have in terms of all the entries that we are supposed to put in the trading stock account. So we can now balance it. Remember, we leave a space there for, we are going to leave a space there for the totals that we are going to put, and then we leave a space for our balance CD. Remember, our balance CD can be on the credit or the debit, so we leave a line there. So I think my space has been exhausted there, so we can just go down with the space that we have there. Right, we leave a space there, and then we put our double lines. We put our double lines there. Let's put our double lines. And then we balance this account. So remember, when we are balancing account, you add the total of the credit, you put it aside, you add the total of the debit, you put it aside. Like in this case, if you add the credit side there, the total that you are supposed to get there, let's just maybe create more space. If you add the total of the credit side there, the total that you get there is 36,563. You add the total of the debit, the total that you get is 55,484. So this is our debit, this is our credit total. So when you have the totals now, the bigger total, you take it and then put it in between the lines on both sides. So the bigger total that you have there is this one. So we are going to put it here, like 55,484. And we put it again on the credit side, 55,484. So the balance CD will come on the side with the smaller total, and you are seeing that the smaller total is this one. So that's where we are going to have our balance CD, our balance, and then we have our CD here. And then the figure for balance CD is the difference between the bigger total and the smaller total. So we are now saying here minus 55,484 minus 36,563. And then the answer that you get there is 18,921. So this one will come as balance CD here is 18,921. So obviously now the balance BD will come on the opposite side below the in between, below the double line. So you come here. So you put your date. Your date will be the first day of the next month, which is April 1. And then on the details, we are saying balance folio BD. And then we put the same figure that we have for CD, which is 18,921 here. 18,921. So that's what we have in terms of balancing this one. And then we can go to the next one, which is this one. We also do the same here. We are going to leave a line there, and we put our double lines there. And we put our double lines there. You add the total of the credit and the debits, and then you find the difference. So if you add there, let's try to see. You try to add there. So you see that the bigger total is going to be 33,000. The bigger total there is going to be 33,211 is, and the total of the debit side 33,211, and it will come both sides. And the smaller total is on the credit side. So you say this one minus this one minus this one. You get the balance CD, which is 24,439. And this is our balance CD. And the balance BD will come on the opposite side on the first day of the next month, which is April 1. And we've got our balance on the details. And on the folio, that's where we're having a BD. And we put this figure, the same figure, is 24,439. Right, so this is what we have, guys, in terms of this question. We can go back again to see what we have next. We've got another question on 3.3. On 3.3, we've got another question that we are having there. The question is saying, analyze the creditors control account by answering the question below. And we have got the creditors control. So this is the creditors control that we have. Then questions are following. What is the detail denoted with the letter A here? A, what does it represent? That is the question on 3.3.1. So we see that A, this is a creditors control. So when we buy goods on credit, we put them on the credit side. So when we have something on the debit and it's for cash payment journal, it means we are now paying the goods that we bought. So this one, we pay this amount using bank. So bank can simply be the description of A. So for the first part there, let's try to see on the other section. We can put bank. We can put our bank. We can put our bank there. So it means here we are now here. So the first here we are saying A is representing our bank. Then the next one, we go back again to check what we have. So here now this question is saying, what is the date and source document for entry denoted with the letter B? Remember, this is going to be the end of the period or the end of the month. And we know that this is the month of April. And it ends on 30 April. So remember, all journal entries, like what I was explaining, we put the last date of the period. This period is April, so 30 April B is 30. So we are going to enter that one as 30. We are here and we are saying 30. 30 is our answer. And then they are also saying source document for entry denoted with the letter B. We go back again to try to find out about that source document. We are letter B, and then they are saying these are sundry returns. They are returns. So whenever we do returns on the goods that we purchase that are in the creditors control, it means we are debiting the creditors control. So we issue what is called a debit note. So debit note is the answer that we have there. Is our source document. Debit note. So we are saying and debit and debit note. Then we go back again to see on 3.3.3. Right, on 3.3.3, we check what question do we have. It's saying what is the details denoted with the letter C? What is the details denoted with the letter C? Right, this is obviously, this is our BD on folio, so obviously our C is balance. We have balance there on C. So we are just going to put that one is our balance. C obviously is representing balance. Then we go to the next one. The next one is saying, what is the folio reference noted with the letter D? We go back again to check where we have our D. D is here. We have got the bank refunds. Bank refunds there. And we are seeing that this this issue of where we have got payments of money, etc. We find them in the what? In the receipts journal. So this is the cash receipts journal, CRJ. So we can maybe check the next question and then we just enter the answer that we have there. So we are saying G is our cash receipts journal, and then our G there is representing our cash receipts journal. Then 3.3.5 is saying indicate the folio reference and the source document indicated by the letter E. Letter E, we can check that one. Source folio reference and the source document. Sundry purchases. Sundry purchases. You see that this is the cash journal, the creditors journal. Sorry, the creditors journal that we have there for sundry purchases. We've got the CJ, and then obviously the source document is going to be the invoice. The invoice is representing this one is our source document. So we've got the CJ and the invoice. So this is for our E. Then we go to our answer section and enter that one again. So we are saying 3.3.4 we have CRJ, and then here we have the CJ, and also we have the invoice. So this is the creditors journal, and then we've got the invoice. So then they're saying calculate the figures for the letter F. We can go back to check what we have in terms of letter F. Right, on letter F, we are here. So letter F, these are the total. I remember we were saying we add the total of the debit and we add the total of the credit, and then the bigger total, we enter it in between the double lines. So the double lines are here. That's where we are having our double lines. So they want the bigger total there, which is going to come both sides. So if you add, you'd see that the credit side is going to be the bigger side. So you add 12,000 there that we are having there at the beginning. 12,789, we add 10,300, 850, we add 350. The total that you are going to get is 23,589. 23,589, and it's going to come in between both sides is F. So this is the figure that we are looking for, 23,589. So we can just go and put that one. And 3,589. Remember, to get it, we said 12,789. We added 10,300. We added 350. We added 150. This is what we did to what we arrived at 23,589. So we go to the next question, 3.3.7. Let's try to see what we have in terms of 3.3.7. We now have indicate what should be written in the place of letters G, H, and I, and J. G, H, and I, and J. This is the date of the balance BD that we are going to have here. So it's going to be the date of the next day of the next month. Remember, we are in April, so it's going to be May 1. G is going to be May. I, this is representing our date, so it's going to be May. Then H is going to be our our balance here, because that's where we're going to write balance. Then our I, we put this folio, then we put our BT. Then our J is now the balance CD figure there that we are taking from here. So we say this total minus 820 minus 190 minus 5,900 there to get that one. So here you are going to get our 16,679. 16,679. And this figure again is going to come here as J. So these are the summaries that we are going to just to put on the other section. Come here. So we can just summarize there and say our G is going to be our main. And then we have got our H is going to be our balance. And we also have our I being our BT. And we have our J being our 16,679. So this is marks the end of this question. And remember, this question had 50 marks that we had there, quite a lot of marks that were there on question 3. So this is what we have, guys, in terms of accounting grade 10. We are still working on question papers. Let's stay tuned. Those who haven't subscribed, please subscribe and share. We'll meet again in the next video. With that, I'm signing out.